Liquidity is the lifeblood of financial markets, and it's also the lifeblood to generating yield, particularly high yield, in yield farming. So in this video, I'm going to show you guys how to track liquidity, get ahead of liquidity, and yield farm in the place where liquidity is the highest. Not just the highest, but the most efficient so that you can maximize your yields and minimize impermanent loss. So before I get started, I have to say none of this financial advice. Use this video as a starting point, but always DYOR. So without further ado, let's jump straight into the content, starting off with the importance of liquidity. So liquidity, is kind of like liquid, right? And when liquid flows down a mountain or down a stream, it follows the path of least resistance. And how that is analogous to financial markets is that it flows through the path of least resistance in terms of wherever that liquidity is going to be able to run freely, where it's going to be used, right? You can think of it as least resistance to make money, right? Because liquidity flows in financial markets to the places where it thinks it's going to get utilized the most. And when water flows down a river, it's going to flow where most of the water can fit the easiest. So now that you can understand how liquidity is like water, you can think of us as the boats inside of the water. The water's the liquidity, remember. So picture a body of water, right? And then picture you as the boat. The liquidity is the water, you are the boat, even though you can supply liquidity as well. It's a little bit different, but it's the same when you're trading versus yield farming. When you're trading, you want to have a lot of liquidity because if you have your boat inside of water that is not deep, like the more liquidity there is, the more water there is. If you have boats inside a body of water and there's not a lot of water, these boats can't really move around. You know what I mean? And whales, they like to do transactions where there are large liquidities, not just because they have a big boat and they need to have a water that's big enough for their boat to fit in, but they also like to move around without being seen. And if the water's really shallow, everyone can see what they're doing and they lose their edge, okay? So you can think of liquidity as just having a lot of water, right? The more water there is, these boats can move around. Whales, you want to think of them as whales. If that makes it easier, go right ahead. These whales can move around in lots of water. It's enough for the small fishes to move around as well, to make their moves without being seen, but also to make their moves without causing massive waves, right? You can't put a ship in a kiddie pool. All the water would be gone. You know what I mean? But if you put a ship in the ocean, it can move around freely. Now, that's from a trader's perspective. From a yield farmer's perspective, you want to put your water, your liquidity, right? You want to put your water where you think most of the boats are going to come in and out of. And these boats is kind of like a strat, right? Or some kind of canal where boats have to go through. You provide in your liquidity, you put in your water in that body of water, they have to pay you to go in and out, right? So you want to put your water where you know a lot of boats are going to be going in and out versus just still water. Even if it's a little bit and people come in and they have to pay a premium, you want to, and this is where volume to TVO ratio comes in, you want to put your liquidity in a place where there's other liquidity providers, but it's also going to be more boats going in and out, volume, versus the liquidity that's in there, right? Versus having a fuck ton of liquidity and not a lot of boats going in and out. You don't want to just look at the TVL. You want to look at the volume to TVO ratio, which I'm going to show you here pretty soon on our Yield Hunter tool. But just to summarize again, the TVL is how much liquidity is in that pool, and the volume is how much is being trading hands. When you have a TVL that is larger than the volume, the fees aren't going to be as good because you have more mouths and less food, versus if you have volume that's much higher than the TVL, you have more food volume feeding less mouths yield. So now that you guys understand that reference, let's look at some on-chain metrics. I'm going to show you guys how you can track liquidity and get ahead of it. And if I had to give you guys one more analogy, this is like selling shovels during a gold rush. The gold is the assets that people are buying and selling, but the shovels is the service that they provide in order to get those assets, which is providing liquidity is like. So you want to get ahead of the liquidity, just like if you are selling shovels, you want to go to where people are going to mine the gold first. You don't want to go there after they're already there because they already bought shovels from somewhere else. So let's take a look at some stuff here. So step one, we're gonna go over to DeFi Llama, right? And DeFi Llama basically shows you all of the stuff that's happening in DeFi, the TVL, the volume, pretty much all the metrics that you need. You can see right now there's $102 billion in total locked in DeFi altogether. So now, this is kind of like a funnel to see where the liquidity is going, right? You want to start at the chain level. You can click on each chain to see where there's a trend change. And you want to see where the TVL is coming. So if you look at Ethereum right now, you can see that, you know, it's kind of been consolidating near almost the highs. The highs was this area here, 77 billion. And right now on ETH is $56 billion in total value locked. I wouldn't say it's increasing, it's more so just like holding where it's been. We're gonna go down the line. If we look at Solana, you can see that Solana's actually been downtrending on the TVL. You have a higher high, then a lower high, and we'll see if this makes a lower low, but it's been continually dropping. I'm not gonna look on Bitcoin because I don't do DeFi on Bitcoin. I think it's kind of pointless. Let's look at Binance Smart Chain, and you can see that this has kind of just been flatlining and it's nowhere near the all-time high, so it's not a big liquidity inflow there. Same with Tron. You can see they had a big spike right here for whatever reason, and it's literally just been trending down consistently. And before I go to where everything's popping off, you might look at Unichain and you can say, oh, it's a 52% gain on the Unichain chain, right? And if we click on it, you know, it's mostly Uniswap where that increase has been. In addition to Morpho, which is like partner with Coinbase, but their TVL is only $54 million. And they're also not a DEX per se. So let's look at why that's happening. So if we go over to Uniswap and we go to explore pools, you can see that they're giving away a lot of Uniswap tokens in order for people to provide liquidity on Unichain. So this is attracting mercenary farmers, which means farmers who are farming these incentives, right? They're probably just accumulating the Uni token because you can get 44% on ETHUSDC plus 20.4% paid out in Uniswap tokens for a total of 64%, right? So it's a big liquidity spike. And if you click reward APR, you can see all the pools where they're giving out rewards. There's 15 pools where they're giving out rewards, most of which are blue chip pools like ETHUSDC, ETHBTC, you know, ETHUSDC, and just different V tiers. And it's on their V4 part, which doesn't have as many analytics. Like you can't even look at your pools on revert on Uniswap V4. So now if we go back here, let's look at BASE. And this is where the liquidity has been inflowing. So you see here is we're creating higher highs and higher lows. They hit all-time highs literally June 13th, and even throughout the whole Israel-Iran conflict, they're still holding up pretty good, right? We did just see Circle go public, which Coinbase is a part owner of, and they get part of that revenue. They're one of the largest buyers of government debt, in the top 10 of government debt buyers in the United States. All right, so next you want to narrow down to the actual decentralized exchange on BASE where most of the liquidity is. Okay, so you can see number one is Aerodrome. They have $858 million in TVL, and then Uniswap is number two with $356 million. Now, me personally, I like Uniswap a little bit better. It's more battle tested. You know, it hasn't been hacked. They're on more chains, and I think they're going to just keep expanding with their V4 hooks and their Unichain, like how we were just talking about. But we can still look Aerodrome. So if we look at their TVL, you can kind of see that it's kind of just been consolidating. They're not near all-time highs. You can view the yields here. So you can search by, right now it's filtered from TVL. So you have USDC Arrow. You know, these APRs aren't really nothing to write home about. If you click APY, you can filter by APY. So you have Wrapped ETH Arrow 1300%, USDC Arrow 1100%, and then you can also refer to our Yield Hunter tool. This is a tool that shows all of the yields in DeFi in real time. You can search by chain, you can search by token, you can search by volume TVL ratio, you can search by protocol. So we're going to look on BASE, and we're going to click, and we can see where the best yields are on BASE, right? So you have, I don't know what KTA is. This is also another good method to find tokens. Whenever a token is pumping really hard, that means people are buying it up a lot. So that means the APR is going to be high. So if you see an APR pretty high for a token pair, that's saying that people are buying that token. But you can just look at some of these pools here. SPX USDC, SPX was one of the best tokens while everything else was kind of falling. And I made a video on how I made 15% per week in the SPX ETH pool. Definitely give that video a watch if you haven't. You got virtuals with 255%. It's a mixture between Aerodrome and Uniswap, as you can see, right? Aerodrome and Uniswap are the top tokens, or the top dexes for providing liquidity on Base. And personally, I think that you can't go wrong with either. It's even, it's been announced that Coinbase is actually integrating with Aerodrome. So you have Aerodrome doing market making for Coinbase and vice versa. So Aerodrome might be the way to go on Base. All right, so now the next step is, now that you see which DEX and which chain has all the liquidity, now you want to look for certain tokens. And as I always say, you never want to provide liquidity for any token you wouldn't hold on your own, because impermanent loss will fuck you right on good. And that means that, like, let's say you get into a pool with ETH and some shitcoin, and that shitcoin goes to zero. When you're providing liquidity, it's a limit order for the underperforming asset. So if the shitcoin goes to zero, now you use your ETH to buy up all that shitcoin, and now you lost all of your capital. So you want to use that filter when you're looking at this. But this is Gecko Terminal, and you can search by new pools. So people are spinning up new pools at all times. But I have the filter set to volume. And remember, you still want to look at the volume to TVL ratio, but you can start at volume. So you have all these pairs here, right, with high volume, most of which has a fully diluted valuation of 6 figures, which is really, really low. You probably don't want to be playing in a pool like that. So I would like to hop on DEX Screener, and you can also search by volume. And as you can see here, it has some pools that are, not just shit coins. Like they have a ETH USDC pool right here. And this is on Uniswap on ETH mainnet. And it's number 4 in all of the volume in DeFi. But remember, you have to look at volume to TVL ratio. So the liquidity is 94 million, but the volume is 323 million. So that's really good, because you have a volume that's over 3x the TVL. It doesn't matter the number size. Like, even if you had a TVL of 100 billion, but the volume is 500 million, 500 million sounds like a lot, but you want to be in pools where the volume exceeds the TVL so that you can make more money, essentially. And then if we keep scrolling down, you see ETH USDC on Aerodrome, right? This is on Base. So we were just talking about Base. And then you also have Sol USDC on Orca, which I made a video on a couple weeks ago as well. So another way you can filter through these, you want to look at Base tokens, right? You can just look at Base tokens. And if you've been in crypto for a while and you've done fundamental analysis, you can say, okay, I know this token's good. And then you can look at the tokens. So you have Chainlink on Base. Obviously, you have ETH on Base. You have Aave on Base. You have Virtuals on Base. You have Aerodrome. You have Pendle. So you look at the tokens you're most bullish on, and then you just go plug them into the Yield Hunter tool. You select the base network. So like, for example, Chainlink. Let's say if we want to get a yield on Chainlink and we're only looking on Base. We put link, and you can see that they're paying out 91% APR on Link Ethereum on Aerodrome, right? So you can kind of do this with all of the tokens that you're bullish on. And remember, the yield might not be that high right now, but remember, when you're selling shovels during a gold rush, you want to get your shovel shop set up before the gold miners come in, just like you want to provide liquidity before all the buyers come in. This is like setting a trap. You're not hunting, you're setting a trap so that when people come, you already have your position set in place, and then you're able to make money while everyone else tries to copy you, essentially. So to summarize, guys, I'm going to be providing a lot of liquidity on Base. Coinbase was the first crypto company to go public. Now you have Circle that just went public. Like I just said, they are one of the largest, in the top 10 largest buyers of government debt to U.S. treasuries. So when you go on Coinbase and you purchase USDC, you give them your dollar, they give you USDC, and then they take your money and they go and buy government debt. They buy Bitcoin, they buy all this commercial paper to get a yield. They're probably borrowing against it, levering up responsibly, but they're still levering up. So I think Base is going to be the network to provide liquidity on this cycle. And I wish I would have used this same filter before Solana season, because we could have caught a lot of not just tokens to buy, but opportunities for providing liquidity. Okay, so I hope this video was valuable. If it was, drop a like, drop a comment, share with a friend. If you're interested in learning how to provide liquidity and seek out the best opportunities that DeFi has to offer with all the tools and resources that you need, click the link in the description. You can book a free strategy session with me and see if our program is a good fit for you, or you can join our community for free just to see what the vibe is like. But with that, thank you guys so much for tuning in. Love every single one of you who's watching, and I will see you in the next video. Take care and trade safe.